Good morning, ladies and gentlemen. Welcome to the Monday Morning Minute. It is March 28th, 2022. Solid week for risk assets last week. No real reprieve on the war front in terms of Russia and Ukraine. Nothing's been really hammered out at this point, but U.S. stocks, internationals, pretty much up across the board last week, which was a positive. U.S. stocks up almost 2%, internationals up just a little bit on the week, kind of getting us a little bit closer to break even, especially in U.S. large cap stocks in particular. Bonds, accordingly, were down on the week. They are almost hitting bear market territory at this point. So I think we're going to continue to track is the yield curve, which we've talked about ad nauseum. That's the difference between the short-dated bonds, kind of more susceptible to how the Federal Reserve is handling interest rates relative to the longer-dated bonds, which are a little bit more consumer-driven or consumption-driven in terms of supply and demand. How much risk is out in the universe? Are people trying to mitigate risk, chase yield, etc.? That's how we kind of determine what's happening at the long end of the curve. What I mean by flattening is the curve is continuing to get closer from the short-dated bonds to the long-dated bonds. This is something that is historically not really great for risk assets over the longer term. It's kind of a precursor to recessions, generally speaking, although we're not calling for that at this point in time with GDP still over 6%. We're expecting in terms of rate of change GDP to be cut almost in half, if not more, by the end of the year. In terms of data points this week, we have a couple of really big ones that are going to give us a feel for the vibe in the economy. The first one's the home price index, which should give us a really good idea if mortgage rates are raising a little bit too quickly at this point. With prices as expensive as they are, we need mortgage rates to be low for relative affordability. If this is something that you're curious about or would like more information on, reach out to the office. We'd be happy to get into the weeds on that. And then the other big one also comes out tomorrow. That's consumer sentiment. This gives us an idea of where the average American is in terms of wanting to spend a little money, if they're feeling bullish or bearish on their own personal lives. Remember, hope is not an investment strategy. Have a fantastic week.